Discord, just in case anything good happens. And I will say that I'm not, you know, like a technical blockchain guru who knows every single, you know, inner working of these applications. I think the spirit of what I'm trying to show here is like basically what's happening, and how it's coming together, and enlighten, you know, those of you who have been hearing about it or, you know, seeing it, to actually like the potential of what's happening underneath the hood of DeFi. And so the first thing that I'd like to kind of get started with is, just give me a second. Is sharing my screen. So let's do this now. Okay. Okay, so can everyone see, everyone can see my screen? Yeah.
Mm-hmm.
Okay, so the first thing that I would, you know, experiment with is something called Brave. Now, Brave is basically founded by the ex-founder of Firefox. It's open source. And what's interesting is that, you know, it basically has built-in privacy, as opposed to Google and Safari, which are constantly harvesting your data for third parties to better target you. And as you can see, I've only been using this for, I don't know, 2 weeks. They claim to have blocked, you know, nearly 15,000 trackers and ads, and that's, you know, created 13 minutes in load time basically, because you don't have to load all these different ads when you load a page. What was also really cool is that it allowed me to import all of my preferences from Chrome. So a very easy transition for me to become, you know, a Brave user. And basically, you're able to go to the rewards page, and hold on one second, and you're able to turn on, I'm not 100% sure where it is, but you're able to turn on the ad revenue. Basically, you get paid every time an ad is shown. So you can see I'm earning the native token of this browser. And again, feel free to jump in if anything, you have any questions whatsoever. Let's make it interactive. And so, you know, it basically is, I would say, kind of a basic infrastructure layer to, you know, be really native in this decentralized world. You can use Chrome, you can use iOS and Android for the mobile access, but Brave is purpose built for being able to access decentralized applications and get deeper into the world of cryptocurrency. So if you haven't already done it while I'm talking, I would suggest, you know, just feel free to go into Chrome or Safari, whatever you use, download Brave, let it, you know, download in the background. So when you kind of go through it on your own, you're able to just jump right in. Okay, so the next thing we're going to talk about, and I'm actually going to, I'm just going to jump over to Chrome for a second. Can you guys see my Chrome?
Yeah.
Yep.
No, Jonathan?
I think.
You see me type?
It looks a lot like Brave, I think.
One second. Sharing is paused. Resume share. Screen share. Hold on one second. Okay, great. So now you see Chrome, right? So the reason I'm doing it on Chrome is because I already have MetaMask installed on Brave, and I don't want to take it off. I want to just, you know, show you what it's like to. Second. Why did that happen? Share screen. Okay. Back. Download now. Install MetaMask for Chrome. And I'll let it. Okay, so now I am adding the Chrome extension. And it basically says, welcome to MetaMask, connecting you to Ethereum and the decentralized web. So how would I describe MetaMask? Who here has heard of MetaMask before this talk? Raise your hand.
I did.
Did any of you have a MetaMask already?
I do. I don't remember the password, obviously.
So
I have it.
You have it, great. So really, this is just potentially a reminder of what it is eligible for, but basically it's a single sign-on for any decentralized application that through this extension to your browser allows you to access a variety of different applications. Now, I'm just going to walk you guys through real quick the setup, and I'm going to create a new wallet. Okay, now what is a wallet? That's something that we should just cover real quick, because there's different trade-offs in the type of wallet that you decide to use. There's something called a hardware wallet. There's something called a software wallet. MetaMask is a software wallet. Now, what are the risks of a software wallet? Well, if someone gets your password, they get into your bank and there's no recourse. Once they send, any value from your MetaMask to their MetaMask, you lost everything. So if someone stole your laptop and was able to get in and, logged into your browser and sent the crypto to someone else, you're fucked. If you have a hardware wallet, then you're actually having, ownership of that digital, currency on a USB drive. And the most popular ones are Trezor and Ledger. You can, invest if that's something that you care about, that type of security. Obviously, there's other risks of hardware wallet, losing your password, losing the actual thing. I haven't yet bought one, so I can't comment on that. But MetaMask is a really good solution. So creating a password, let's just okay, create. And then there's the secret backup phrase, right? And so the idea is that if I go into another browser without having, my secret backup phrase, I can't access my crypto in that other browser. So you need to actually reveal the secret words. I would send them to myself as a WhatsApp message or as an email or whatever. But for now, I'm just gonna, remind me later, and you can set it up. Now, we're already getting into the first use case of MetaMask that I'm here to share with you, which is liquidity sources. Okay, what does that mean practically? Well, in the world of cryptocurrency, initially it started out with the Binances, the Poloniex, the Coinbases, the Krakens of the world, which basically imitate the NASDAQ and the New York Stock Exchange and the whatever Hong Kong Stock Exchange, in that they bring together buyers and sellers. And for that service, they charge a fee, a market making fee. And Coinbase and Kraken and all of these, market makers did this. They just replicated the traditional financial system, except they were catering to a different audience that was trying to transact in a different asset. This introduction of decentralized exchanges, which has been building over the last number of years and really has taken off in the last, I would say, few quarters, basically gives the crowd the role of market making as opposed to a centralized entity, which means that any one of us could contribute a pool of liquidity towards a specific pair. So let's say you guys are familiar with stable coins, right? Like USDC, which is basically a digital representation of the dollar. Well, let's say I wanted to trade USDC for Ethereum in a permissionless way. I don't want to sign up for Coinbase. I don't want to KYC. I don't want to deal with all of this. And maybe Coinbase doesn't have the currencies that I actually am looking to purchase. I go to Uniswap, which we'll get to, or some of these other liquidity providers, and in a permissionless peer-to-peer manner, I'm able to take advantage of the liquidity that's provided by a third-party crowd, not a third-party institution. Okay, so we'll get into that in a few minutes. But what MetaMask has tried to do is aggregate all of the decentralized liquidity and give you the best offer. So here it's not gonna come through because I don't have any tokens. So I'm gonna come back to 1 second. I'm just gonna Vitali, welcome. Just notice that you're also here. And give me 1 second. And I'm sharing back to Brave. Okay, so you can see, and let me know if you can see that I'm holding 1 ETH in my MetaMask. Can everyone see that? Yeah. Mm-hmm. And so what's interesting is now that I have 1 ETH in my MetaMask, and look, if you want to buy ETH, there's a way to do it with the debit card. But if you want to deposit ETH, here is your address in this, area. And basically, let's say you have money, let's say you have Coinbase, right? Or let's say you have Kraken or Binance or any exchange or a private wallet, whatever it is. If you want to transfer it to your MetaMask, you can either, just go to your address that way. But the easiest way to get your address is really just to, you see how it says copy to clipboard? You click on that, it's now copied. If I go up here and I paste it, it appears. Okay, great. Now, back to the swapping function, right? So let's say I click swap and I want to, do 1 ETH and I want to switch it for, let's say Uniswap, because that's where we're going, okay? And I'll review the swap. You'll see that it now is checking all the different liquidity providers. These are all decentralized and giving me a quote. Now, why does it say you need 0.07 ETH to complete the swap? Because you're actually paying a transaction fee to create this, swap, and you're paying it to the miners on the Ethereum network who are incentivized by what we call gas fees. And basically, you're paying them to secure the ledger and validate that this transaction occurred, and make sure that the ledger is whatchamacallit. I don't remember the word, but just like integrity, like it has integrity, and the funds actually transferred one to another. Now, what's really shitty about this quote is that they want me to pay $119, okay, which is more than 10. It's like 12% of my, or it's like 10% of my asset value, right? So no one wants to pay 10% transaction fees on their transactions. So even though MetaMask claims to pull together all this liquidity, they actually mark up this network fee in a pretty perverse way. So I would advise against using MetaMask as your swapping mechanism, because I really think they're ripping people off. So we're going to go back. And that's basically the high level overview of what MetaMask looks like at the beginning. I'm just going to jump into the next part of the workshop right now. And if you guys have any questions, specifically
Can I ask you a quick question, Matt?
Sure.
So I had this experience the other day. I was going to go and transact, something, was using MetaMask, and also saw the extremely high gas fees. When is MetaMask then help? Like, why would we use MetaMask?
So MetaMask is the wallet.
Or is there an alternative? That's sure.
Yeah, MetaMask is the wallet. So there's other different wallets you can use. You can use a Coinbase wallet, but MetaMask, I would say, is the most downloaded and used, and like the most code contributed open source wallet project out there. So it has a lot of support and a lot of ongoing improvements and features. But you wouldn't use MetaMask to swap, right? You would use MetaMask to hold your tokens. I'm just showing you that there's that functionality, but I'm not
Understood. Okay.
I'm not using it for my swaps. What I am using for my swaps is something we call Uniswap. And so we can see up here, I've already connected my MetaMask, right? But when you go in for the first time on Uniswap, it's going to ask you to connect your MetaMask. And it's that simple. You literally click connect. It has an integration with the browser. Boom, you're in. It's that simple. It's that easy to get into an application, with your MetaMask. So now that I'm in Uniswap, again, very simple interface. What's the functionality? The functionality is that I want to exchange my Ether for any token that Uniswap supports, okay? Now, you'll see that there's a lot of tokens that are here, and these are all Ethereum-based tokens, ERC20-based tokens. And many of them are names you may have heard before, and they're sort of like a collection of more popular, reputable tokens. But then there's a subset of tokens that you can add yourself. And we'll get into that in a second. But first, I just want to show you a basic, flow. So give me a second. So I want to send 1 ETH. And in return, I want Aave, which is funny because we'll be using Aave next to demonstrate the power of that program, excuse me. And so basically the estimated price is based on all of the liquidity that has been staked into the Uniswap protocol at a given moment. And you can see that the price impact of me doing this swap is almost nothing, which means that my 1 ETH as a percentage of the total pool is almost nothing, which means that there's a lot of liquidity for this trade, okay? Now I want you to look at a much more thinly traded token, Small Love Potion. And you can see that the price impact is 100 times greater than if I were to trade it for a well-known token, right? And this reflects the similar mechanisms of an over-the-counter stock in the public markets, right? Like if there's not a ton of supply and liquidity, every time you make a transaction, you're either causing slippage, right? Like the price will go down as you sell. You can't sell all of the stock for the price you want to because there's not enough demand to support that transaction. And the same goes with the price impact, right? If there's not many sellers of this token, I'm going to bid up the price. And Uniswap does that automatically. They show you what the price impact will be. There's also a provider fee. Hold on one sec. And we'll get into what that means in a bit, but I just want to show you what happens when I click swap, okay? So here we go, 1 ETH, 20,000 Small Love Potions, waiting for confirmation. And the gas fee is $80, and it says alert, insufficient funds. Why? Well, it turns out that every transaction on Uniswap requires Ether to actually pay the miners, as we discussed before. So I have to reject this, transaction rejected. I go back and I say, okay, you know what? I'll do 0.9 ETH. Okay, great. Confirm swap. Okay, I don't get that insufficient fund thing. I just get confirm. But wait a second. The gas fee is $80, okay? That fucking blows, right? I'm trying to do 1 ETH, which is 1,800, worth 1,800, and I'm losing, whatever that is, like 4% off the bat just to get this transaction done, which means that I need to expect at least 4% gain on this, new token that I'm entering in order for it to make sense. Oh, wait, what about when I want to sell it back to ETH or back to USDC? I'm going to pay another $80. So I'm not telling you to go on Uniswap today and start transacting, because basically Ethereum is not yet scaled, right? The reason the gas fees are so high, the reason it costs so much per transaction is because there's more demand to actually, do these swaps than there is mining capacity to actually process all of this new data. And in order to get, a miner to approve your transaction, you need to pay them a lot of money. It's a miner's world. There's too much demand for Ethereum right now. Now, that being said, when you get to larger sums, right, larger amounts of capital, these gas fees are flat, right? It's not like it increases proportionally to how much you're trading. So as a percentage of your overall trade, when you get up to like, if you want to do 10 ETH or 20 ETH or 30 ETH, these gas fees are kind of meaningless, right? They're, 0.1% of your trade. But if you're starting out small, Uniswap is actually kind of a shitty experience because you're giving up a lot of your potential gains to the liquidity provider. Now, there's something else that is a way to actually enjoy the decentralized exchange, and that is, any questions so far on this this segment on the swapping? I mean, the beautiful thing is, right, if I click swap and I go through with it, and the transaction gets approved, I literally just did an exchange without any central market maker. It's mind-blowing. And there's $5 billion of liquidity that's happening daily on this platform. $5 billion of trades between people peer-to-peer with a crowdsourced market-making mechanism. This is just Uniswap. There's SushiSwap, there's PancakeSwap, there's 0x. There's billions of dollars of exchange happening with just code in the middle. It's nuts. Like, just try to think about this, world we've lived in forever, where there's a central authority basically accounting and settling every transaction. This whole thing has just come out of the left field basically in the last few years, and now billions of dollars are exchanging hands between people. Now, what is a pool? Well, a pool is actually the way that the crowd provides this liquidity. And they do that by, putting in, let's say, 0.5 ETH and selecting USDC. And obviously, I don't have any USDC, so it's not going to work. But what would happen is that, let's say I want to create this pair, and basically you need to have half in one currency and half in another currency, and you lock it into a contract. And every time someone trades on that pair, you get a proportional, like a relative proportional fee that accrues to you as a liquidity provider. So just for example, if I stake 1 ETH and $1,800, I'm actually getting, I'm doing this on my own on a different MetaMask. I'm right now earning a 48% APY, right? I'm earning almost 50% annually just by locking up USDC and Ether into this liquidity pool. Now, it's a variable rate. Over time, more people will use that pair, less people will use that pair. Providing liquidity is also betting on a specific pair, as this is there's an undersupply of this pair. It's going to increase, and there won't be enough liquidity, right? So you can actually express a theme within this crypto market through the liquidity that you provide. You can say, I think demand for this token will go up, and I am putting liquidity in before that happens. And as it ramps up, more and more people are going to have to use my pool. I'm going to get paid a higher percentage because the pool's smaller, and then there's a way to actually generate even higher yield. But if you just think about this innovation, right, like the crowd providing liquidity, getting compensated, and the returns at present are completely unprecedented. Now, the risks, right? There's always risk if there's return. Obviously, this is a new technology. There's bugs, there's hacks, there's this, there's that. You don't want to put all your life savings into this, pool and just, hope that it works. You want to be responsible and probably put no more than, 10% of your overall assets into this asset class at the beginning, and then Hopefully it becomes 50% if you're in it long enough, because it, you know, takes over all other markets. But you know, the idea is that you're able to accrue fees by being a financial institution yourself. It's crazy just to think about. So any other questions here on Uniswap? The only last thing I'll say is that today it's still cost prohibitive to put money into a pool. Like, you'll pay $80 for gas in and out, maybe more. And as a result, you know, unless you're really in it for a long period of time with a significant amount of capital, that eats away at your return, you know, substantially, especially the lower you are. So again, this workshop might not be like, you know, hey, I'm putting $100,000 into crypto and I don't care about gas fees. It's more to understand what's happening under the hood. This, you know, protocol is just code on the internet, on Ethereum, and hundreds of thousands of people are transacting against this code every single second to exchange value between different tokens, including stable coins. Now, Bitcoin is not part of Uniswap because it's a separate blockchain, but anything that's connected to the Ethereum blockchain, you can exchange on Uniswap. Great. That's Uniswap. Any questions? Great. So the final part of our workshop before I'll, you know, let you guys.
I do have a question, Max. Like,
yes, sir.
What's the what's the advantage of using Uniswap versus, let's say, Binance to do the transactions?
The advantage. Okay, so
Yeah.
one advantage
is there one?
is.
Yeah.
What's that?
Is there one? Like.
Right. So one advantage is a availability advantage, right? So there are certain tokens on Uniswap that are not on Binance, right? So
Okay.
if you want to, you know, express a view on a certain token that's not on Binance, you can, you know, look for it on Uniswap. That's like the major use case. The second
Sure.
use case would be if you're a US citizen, you can't use Binance.
Really?
Yeah. And so you don't have access to a whole lot more, you know, tokens. But in terms of, you know, the fees that you would pay on Binance, they're an order of magnitude lower. So if you do have a Binance account and you're satisfied with the, you know, the availability of tokens there, there's no real reason to use Uniswap other than to, you know, create liquidity and earn a return from, you know, putting your let's say dormant tokens to work, right? And that's another thing we're gonna discuss here with Aave. Right now, there's a ton of innovation in terms of, you know, how do you actually generate a yield on the tokens that you have no intention of trading, right? Or no intention of liquidating. They're just sitting there kind of doing, you know, what they do, but why not earn an additional return while they sit there, you know, in your own Metamask, which is basically your own private bank. Does that answer your question?
Yeah.
Awesome. Okay, so Aave and Compound is actually another, you know, alternative borrowing and lending protocol that basically allows you to earn interest or borrow against, you know, your existing tokens. And as you can see, the first whatever 7 tokens here, what are they? They're all, you know, stable coins pegged to the dollar, basically. So what does that say about the, you know, the decentralized world right now? That there's, you know, a lot of demand for, you know, digital dollars, and people want to borrow digital dollars more than any other token, right? Like the deposit rate is a function of the lending rate, right? If you can lend at 20, you can pay your depositors 10. If you can lend at 5, it's hard to pay your depositors 10. You're not in a good business model. So what's happening here is the free market is basically expressing a view of what is your, you know, what is the demand and supply of these digital dollars. And as we can see, USDC has a reserve of 290 million versus a borrow of 262 million. So unlike the traditional capital markets, where when you try to borrow, you actually might only need to put 20% or 30% collateralization, in the decentralized world, you have to over collateralize. You have to actually give more than you're borrowing, because in the decentralized world, in the trustless peer-to-peer world, they're not coming after you for your house. They don't know who you are. The only thing that they can come after is what you've locked up into a smart contract. So assuming you pay back what you borrow with interest, you get everything that you deposited. Assuming that you don't, the protocol will retain whatever it lent out to pay back whoever was on the other side of that transaction. And what's interesting is that you can see there's a variable and there's a stable, right? So you have the ability to also bet directionally what you think is going to happen to the interest rate over time. Now, what's psychopathic, if you ask me, is that today, if you deposit true USD, you get 18% a year. That's risk-free rate, right? That's cash. You're getting 18% a year in cash. Now, that will change, right? The past 30 days was 10%. So maybe, in a month, it's 10%. And if you want to keep your true USD locked into that contract, now you're getting 10% annually. It accumulates every second to your MetaMask. Basically, what happens when you deposit into Aave is you get a token that is it will basically say A and then whatever the token is. And when you go into MetaMask, you'll see that it's like like a mirror token, basically, that you get as a proof that you have a deposit in Aave for that amount. And then when you want to withdraw from the contract, you basically return the A token and get back the original token, right? So if I deposit USDC, I'll get proof that is, I deposited into Aave, it'll say A USDC. And when I want to return it to USDC, or when I want to withdraw from this contract, I'll return that A USDC for my MetaMask, and the balance will go to zero. So just to show you like the flow, Ethereum, it's a very low return to deposit Ethereum, but that's all I have in my wallet right now. So I'm going to go to deposit. Wait a second. Okay, so this is a different wallet, Sababa. So basically what I could do is, I'm not going to use this USDC. I don't need it. I'm, just putting it to work while it, sits in my MetaMask. Instead of putting it in my MetaMask for the next year and letting it sit, I want to earn 7%. Why not, right? That's the great idea of blockchain. However, what do we have again? This unbelievably high transaction fee of 148. I mean, that just completely wipes out, a few basis points of my return. But if I continue, right, it'll say 1 out of 2, please press deposit. My MetaMask opens. It says they want to charge me $131. And if I confirmed it, it would then go into Aave and start accumulating interest every single day. I'm not going to do that because I don't want to pay $130 right now. But what is the breakthrough here? I mean, basically, we've decentralized lending and borrowing. It's now happening through the code between peer-to-peer. There's no middleman, and it's just the very beginning. But what I'm trying to illustrate throughout this workshop, and also, just throughout the process, is that there's something fundamentally different that is now becoming real. In 2017, all these white papers, all these ICOs, all the speculation, all the hype, all the blah, blah, you know, it crashed. Okay. In 2020 and 2021, there's $3.4 billion that's locked into smart contracts, earning interest algorithmically. It's crazy, right? I mean, it's a real use case, it's a real application, it's working, it's powered by Ethereum, and the real challenge is that it's not yet scaled, right? And that's why it costs so much to actually benefit, you know, from the software that's been developed. Now, when I first started using MetaMask, the UX was terrible, the UI was terrible. Now it's kind of like a pretty cool extension. That has value. Aave, you know, this user interface is kind of shitty. It's kind of, you know, the beginning, but a few years from now, you know, it will look like Marcus from Goldman Sachs, right? I mean, what we're experiencing is a global shift towards building open source financial products that anyone can use from any country without a username or password, just with a MetaMask and a browser. That's all it takes. So that's where I'll end the workshop in terms of the formal you know, overview. And I'm happy to stay online for the next 20 minutes. If you have questions, if you have, you know, if you want to try out some of these things yourself and you want to ask, you know, questions, I'm more than happy to help however I can.
Yeah, actually, I have a question. Yesterday there was a big scandal, right? On the Friends with Benefits coin. You know what I'm talking about?
I don't. Enlighten me.
No.
No.
No, I'm not deep enough. Like I understand someone actually manipulated the market through Uniswap to get $8 million basically out of their account. It's a startup kind of ecosystem. I have no idea.
Yeah.
Anyway, okay, no explanation here.
I can Google it. Like,
no, it's fine.
Friends with Benefits, Uniswap. Let's see. Right. Yeah. So actually, it's funny because I was actually looking at this token called Whale, and it's basically you know, a crypto whale who started buying up different NFTs, and he decided to take a piece of his collection and allow the community to participate in the value appreciation. And some of the tokens were hosted on, I don't think it was Uniswap. I think it was a different, it was called Roll, I believe. They sold it on Uniswap, but they hacked a different wallet provider, basically. Whale went from like $40 a token to $5 a token in a second, basically. And since then, it's back up at like 30 or so. So it recovered a lot because only 2% of the Whale tokens were actually hosted in that wallet. But that does illustrate, you know, there is risk. You know, the trade-off of having autonomy and not being forced to go through the traditional financial system is that now you have great responsibility, which, you know, manifests in potentially losing all your money or losing your password, or, you know, there's so many risks that you know that users have dealt with to date. There is an Israeli company called Zengo, which is actually a very interesting approach to digital wallets, which basically allows you to recover your password from their customer support without them hosting the wallet. It's a really cool innovation in how you know, basically architect a wallet. And I think we'll see more and more innovation, you know, in terms of how do you give the customer, the user, more and more tools to manage that risk themselves. At the same time, there will always be, for institutions and for a certain class of consumers, desire to have someone else, be on the hook for holding your tokens.
Can I ask a question about gas fees and kind of like
Yeah.
where? So I've been, and I was trying to get at this before, but I didn't want to like interrupt your flow.
Thank you.
So I wanted to transact the other day about, I can't remember what it was. And I think I was using my MetaMask wallet, and I'm about to transact. I was going to spend, I think, $180 to buy, I think it was actually, sorry, I think it was an NFT. But the gas fees were like 3 times the price of the actual NFT that I was buying, right?
Wow.
So what's the point? Like I guess I've had money in cryptocurrency for many, many years, right? And I have a background in fintech and all this stuff, and I'm struggling on the daily seeing the almost the reason to use it, or like where we're going, because it's almost like if I'm going to go buy an NFT and I could transact with a regular credit card, just bring me back the 2.5% interchange fee. Like just charge me 2.5 versus like a 300% gas fee on a transaction. Where does this go? And how does that get fixed? How does it make it more? How do we get more fluid here, where it's actually worthwhile? Because like you were just showing us some great potential like liquidity options to stake our coins.
Right.
But you said yourself, why would I go and do this if it's going to cost me $150 to go and stake this in my, a one-way gas fee? That's not even taking it out.
Right.
Right. So
right.
What do we do here?
No, I think it's a really good question. So, the first thing I'll say is that there is competition to Ethereum, and there's different blockchains like Polkadot. There's the Binance Smart Chain, which actually, I haven't really explored, but the gas fees are pennies for a lot of those transactions, and I need to explore, that blockchain a little bit more. All the smart people, including Vitalik, are basically saying that in the next few months, both Scale and Matic, that were just listed on Coinbase like over the weekend, are basically going to provide upgrades to the Ethereum network, such that the amount of data that you actually need to store on the Ethereum blockchain to validate a transaction should go down by 5 orders of magnitude over time, right? And so that would, again, bring that $100 transaction fee down to a penny, or whatever the order of magnitude calculation brings us to. So I think that's what people are hoping for. And right now, it's a rich boys, rich woman, whatever club, where like unless you have a certain AUM, these transactions don't make any sense. For an NFT, it's not something I've transacted on. Like I know, you can go to Top Shot and you don't have to pay with crypto, right? You can pay with a credit card. I think there's still these native platforms that are only accepting ETH, in which case, whatever NFT you wanted to buy, if you thought had the potential to go up by 10x, because you understand culture better than the market, whatever you were planning to buy, then it's still embryonic, and it's not it's not something that maybe you want to buy at this stage, because the economics don't fully make sense. But if you think there's upside and it costs you 200 and 70% of that's gas fee, but it's then worth 1,000, you still made a great call. If you don't have that much conviction and you just want it for sentimental value, because you like it, then you just have to get comfortable today, paying more in gas than for the actual thing. Yeah.
But let's just say that we just watched you like live basically say, why would I do that? Like, why would I transact and pay such a high gas fee, for doing that swap?
Right.
Or to stake. Are you staking anything right now? Like, do you have any of your coins basically out there on loan?
Yes, I stake USDC and ETH. And those are like for my portfolio strategy is to always have USDC, like a certain percentage, and just always balance the portfolio so that I'm protected if there's a huge crash and I still have some liquidity, and I don't participate fully in the upside, but that's my risk management strategy. So I also believe in Ethereum as the one of the protocols that has by far the most developer tools and attention and excitement. And yes, it could get disrupted. So I don't have everything in ETH, but that's a pair that I feel, those are two coins that I'm likely to have in my portfolio for ever, or as for the foreseeable future. So if you have a pair like that you really believe both of them are a good part of your portfolio, there's no reason not to stake it, unless of course it's like less than $1,000. And again, I mean, I won't get into the numbers, but you need to do the economics for yourself. Like if you're going to put it in there and you're just making back the gas fees in 6 months, then is it worth having that lockup? It's probably not.
For sure. Do you do staking on Aave?
No, so I'm doing a pool on Uniswap because the returns right now are much more attractive than Aave. But I think the big thing here is that it works, not that it's not usable to most players financially, but it actually works. The code is running, like it actually allows this peer-to-peer lending and borrowing and market making and other experiments that we'll see, whether it's insurance and other index products and so on and so forth, prediction markets. There's just so many experiments happening concurrently. There's a project called Mirror. Mirror basically lets you buy stocks, like synthetic representations of stocks. So you'll basically see synthetic everything on the blockchain in the coming years. And thanks a lot, Gideon, who just dropped off. So yeah, that's how I see it, at least. Any other questions from the crowd? Okay. So Toda Rava. Thank you guys for taking the time. Hopefully it was helpful. And if you have more questions, max@lul.bc or on LinkedIn, whichever is easier for you, and happy to keep you posted if I do a different workshop on a different part of the crypto economy.
Thanks so much. Take care. Appreciate the time.
Absolutely.
Thank you so
guys.
much.
Bye-bye.
Take care, Max.
Bye.